Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Monday's action, we saw the markets start on a very positive note early in the session. The Nasdaq took the lead again as it was able to outperform all of the other indices. I have been discussing a leadership change over the last 10 days. In spite of the strength in the Nasdaq today, it's a long ways from taking back the lead. As we come into the technical section, I'll review these spreads, and they're starting to show serious signs of setting up a major bottom, which is likely to take several more weeks to finally form. The biggest story on Wall Street right now is the decline of the Dow. That has been driving metal prices higher and a lot of euphoria in that market, which I'll cover both gold and silver in the technical section tonight. The other story that is emerging out there right now is the new $1 trillion stimulus bill. With the Fed's FOMC meeting starting on Tuesday, I wouldn't be surprised if the Fed has some type of matching program that will also add another $1 trillion in loan guarantees or some facility that they may announce, or an expansion of a facility. It appears since we started this crisis that the Fed has been matching whatever stimulus comes out of the administration or out of the government spending. Now, Chairman Powell is going to remind us that they have lending powers, not spending powers. That's why they're likely to announce some expansion of a program or even a new program if they're seeing dislocations in other areas. Most likely what we're going to do over the next several days is enter into this sideways trading pattern, which is going to be a major consolidation for a number of weeks. There's some major dialogue behind the decline in the Dow, talking about a debasement. Yesterday, Bank of America came out and said that the debasement was going to cause a complete shift away from U.S. securities over into emerging markets and foreign markets. There are some signs that those spreads are turning as well, so I'll be watching those cash flows as we go forward. But the debasement of the currency is the big debate right now. In my work, I'm seeing the potential bottom of the Dow, and we should start to see some firming. I've talked about this pattern over the past several weeks. I will also cover that in tonight's video. The final item tonight, there's 170 earnings reports coming out, and they are substantial. There's a lot of major players coming out. As all the anticipation around the Fed, the stimulus bill is going on, we're going to have to deal with a lot of earnings reports, and it will be interesting to see how these affect market sentiment. I do believe that we're going to continue to see a lot of mixed reports come out, and this is going to keep the market in a churn. I don't think we're going to break out this week. I'll talk about all the numbers in the technical section here shortly, but there is a lot of information we're going to have to absorb, and this is going to keep the markets in check, I believe, at this time. Possibly if Chairman Powell comes out with some sort of new facility or something that the markets will look at as further support, at that time, it's possible we could get some positive movement to the upside. For the moment, it appears that the markets are going to continue this sideways churn. Let's take a look at the charts and see what they're telling us for Tuesday. Beginning with the WaveTech database, there was very little rotation. There were 382 new buys and about 200 sells, so basically just a rotation going on, not a lot of change. The short-term database remains at 86.1% bullish. Over the next several days, I do expect to start to see some rolling over and some selling coming into the short-term models, but for now we're continuing to remain very stable. Looking at the spreads, I've started some new spreads. Now, the first two spreads are the emerging markets versus the S&P. The second one is the EFA index. And then we have Dow Jones versus the NASDAQ. We've got the S&P, small cap, and then ultimately we have the mid cap. On the end, we have the NASDAQ futures versus the E-minis. All of these charts are starting to see a shift. Most significant one is the small cap versus the NASDAQ. There's definitely starting to see a basing period setting up here. If we switch over and look at a weekly chart, you'll see even more of the structures starting to come in play. Now, This is the type of structure we should see for a bottom, but there's a lot of work to do yet. Most likely, I'm a little ahead of the rotation. We're seeing some increases, underlying momentum, and other factors that I'm seeing on other markets that are indicating that this is going to be a continuation. One of them is the rotation of stocks that we saw coming into the database, both on the intermediate and the short-term models from the WaveTech process. So all of this is starting to set up a tone for a shift in leadership. Beginning tonight with the S&P futures, they were doing quite well. They were up about 14 handles earlier. They faded all the way down to only up one handle on the session. We traded just above R1 at 32.45 with an overnight high so far of 32.4675. Market backed off from there as we move toward the S1 level, which is 32.19. The low so far is 32.31. Not sure we're going to be able to trade down into that S1, but most likely we'll see an S1, R1 level. The extreme, if we push the extreme at all, we're most likely going to see it move up toward the R2 number on the daily session. Going to the cash market, the grid is starting to upward slope. I discussed in yesterday's video that we had a downslope. Yesterday's action was enough to turn this up. PPM1 has turned up. PPM2 is remaining right at a trend level. PPM1 is at 0.26. Anything over 0.25 is a trend. This is a positive number, so we're looking at an uptrend. PPM2 is at 0.23. So this market is very stable. We're not really seeing any potential for a breakout. Same as in the futures, looking at an R1 number, it'd be 32.48. Yesterday's high was 32.41. There's going to be a lot of resistance between R1 and R2 for the next couple of days. And I don't think the markets will get much ahead of the Fed meeting on Wednesday, but we do have a substantial amount of earnings reports coming out, which could stimulate market sentiment. So the expectation for today is an S1 32.30 on the downside, R1 on the upside with the potential of going to R2. The next level in the grid down to 32.20, there's substantial support down at these levels. I've discussed over the past 5 or 6 sessions that the 3200 level is likely to hold. We did print down to exactly 3200 last week, and we held that level, and we're continuing to see some underlying strength in this market. But as I've said, I don't see anything happening here except for a broad sideways range. The weekly grid has narrowed a little bit over the last couple of weeks. R2 is 32.59. We just looked at R2 on the daily was 32.52. On the downside, 31.95 is the extreme. So far, we've had a 32.14, 32.41 range for the week. PPM1 and 2 are definitely in trend mode and are going to support this market. The bottom end of the grid is at 31.28 level. We also have the 10-week moving average at 31.38. There's actually less than a 20% probability for the markets to decline below those levels. Looking at the weekly NASDAQ numbers, so far we've held the lows of last week, which is 10,301. The low this week has been 10,401, and we're seeing some trading back in this range. The entire pattern that's going to unfold here is going to be a sideways range. There's a very low probability for the markets to break out of this range for this week. As I mentioned in the opening commentary, it appears that we're going to be in this consolidation phase with all the news that's coming out this week and things to absorb. We're going to have positive and negatives. It's going to be a grinder. The pattern that we should continue to see over the next several weeks is remaining in the grid, a zigzag pattern setting up. It won't be until the end of August that we're likely to set up a pattern. And looking at this chart, all the underlying elements continue to suggest that this market will continue to move to new highs, but this sideways choppy pattern is likely to last anywhere from 4 as many as 6 weeks. it does appear that the markets are setting up for a rally into the election. We'll see what kind of numbers come out, if there's any surprises in the economy. But for now, this technical pattern is very strong. This is combined with everything I talk about on the channel, which is the WaveTech database, which right now on an intermediate level is 65% bullish. And then the short-term database is around 86%. When you have tens of thousands of uptrends detected like this in this type of quant environment, this is not where a major rollover is going to happen. If we go back to January, I've talked about this before, our models were beginning to sell in the second week of January. January 21st was a big tranche of selling, and then all the way to mid-February, they were constantly selling. By the time that the market rolled over, we'd already moved to 30, 40+% cash. And then, of course, in March, it absolutely rolled over and basically dumped virtually everything. This is not the configuration from a technical viewpoint or from our database that we're going to see a major decline. Not going to happen. We're going to continue to grind this out for at least 4 to 6 weeks. The next market we'll look at is the US dollar. This is traded right down to the 200-week moving average. It's currently at 93.83. The last price right now is just slightly below that level at 93.74. PPM2 is beginning to turn up, and I believe we're going to see some stability around this line. In the past, when we've traded down just below this, we'll come back above it. It's typical action around these 200-day moving averages. It's some consolidation around those numbers. Expect to see the dollar start to stabilize, and this will tie together with the analysis I'm going to talk to you about in both gold and silver here in a few minutes. As I mentioned in opening comments, this is one of the biggest stories out on Wall Street. Everybody talking about the dollar is getting weak. Well, the answer is no. The dollar has been weak for multiple months now, and it's a typical scenario when you see media start to pick up the story. I can't tell you how many stories I saw on the internet today around major financial market outlets that were talking about the dollar. This is most likely an extreme when you see all the stories that are coming out around the dollar and how all the effects it's going to have. Chances are we're at least at the moment at that point where we're going to see consolidation and see some backfilling. Now we're seeing slight positive overnight. The dollar has a little bit of a bid in it for the first time in several days. But this pattern is substantial. I believe it will hold. However, if it doesn't, I'll be watching this market very closely for any type of configuration that's going to tell us what's likely to set up. The one thing I do want to point out, the market grid is flattened off, and typically that's where we're going to get a consolidation. It appears to me that the rest of this summer is going to be a consolidation phase in a lot of these markets. Next market will be gold. Gold appears to me is setting up a high. We were able to print to the 1974 level. Most likely we'll see a consolidation. Looking at the grid, we're going to see a consolidation. RXT for today has been 1964 to the low of 1897. Since gold printed up to the 1974 level, it's now trading toward the lower end of the range, setting up a potential reversal. If it closes below the 1931 level, then expect to see a sideways range set up. The PPMs are very robust. There's going to be a ton of support under this market. It's possible that a decline back into the grid between the 1914 to 1905 level could occur. Looking at the weekly grid, the RXT number, the extreme, was 1956, so we traded below that. This is a similar number I just talked about. R1 now is 1911. We're not going to see anything in the S sequence at all. S1 is 1883. That doesn't appear to be a possibility. If it closes lower today, we'll see a pullback and start a consolidation phase. It does appear that there's a potential climax, and it's likely that we're going to see some sideways action, printing back, potentially back to the 1883 level, but I believe we'll stay above 1900s, especially since we've printed so high at this level. And you can see here for the week, we've been 1899 to the 1974 as the range. So the worst case I see here is the 1911 print. We will see some profit taking come into this market, setting up this pattern. The final market tonight is silver. It looks like it's finished a fifth wave on this spike that we saw overnight. As with the gold, we've got substantial support. The PPMs are huge numbers, 2.38, and anything above 0.25 is a trend. So we're 7 times the trend. This is a very robust trend. What likely to happen is we'll see this consolidation. The 10-day moving average will come up underneath this pattern. At that point, there will have been a consolidation, and the next level will be for the markets to move higher. The weekly high projection for this week was 24.86. It's been to 26.27. This has definitely been a huge rally, gotten overdone, and now we're going to see that consolidation set up here. This could be a much larger consolidation, and the low of this week at 22.94 is going to be the big number to watch as we go forward. Most likely what we've seen overnight was a climactic move and a setting up of a multi-week, at least 2 to 3 weeks of sideways consolidation. This will complete this video. Remember everyone, we have the WaveTech training tomorrow at 4:30 New York time. We'll see you there. Thanks again for watching.